Record-breaking alert. Gold rockets past $3,550, and there's a hidden twist you need to see. The price of gold has climbed by nearly 30% over the last 12 months, soaring above $3,550 per ounce this week to reach uncharted territory. Investors worldwide are scrambling for this age-old safe haven as uncertainty ripples across the global economy. But here's where it gets controversial. Some experts warn this rally might be more about speculation than a true hedge against risk. Why has gold become the go-to choice right now? In times of economic turmoil, think wars in Ukraine and the Middle East, escalating trade tensions and political shocks. Gold's reputation for stability shines brighter than volatile stock markets. Traders loathe unpredictability, so they flock to gold when everything else seems up in the air, explains Tim Waterer, chief market analyst at KCM Trade in Australia. And this is the part most people miss. Unlike paper assets, you can physically own gold bars, coins, or jewelry, sidestepping any mistrust in banks or governments. On the flip side, institutional players often favor financial gold via futures contracts or exchange-traded funds, which let them ride the price wave without hauling vaults of metal. There's another powerful force at work, the US dollar. Gold and the greenback share an inverse relationship. When the dollar weakens, gold typically gains ground, and vice versa. In April, gold's price surged after the introduction of Donald Trump's Liberation Day tariffs rattled trade expectations. More recently, his repeated calls for lower interest rates and a softer dollar have fanned the flames of gold buying, according to Kyle Rada, senior market analyst at Capital.com. Lower interest rates diminish returns on savings and bonds, making gold's zero-yield appeal relatively stronger. Conversely, rising rates pull some investors back into interest-bearing assets. Foreign buyers, too, are eyeing gold as a currency hedge. When the dollar slides, they get more for their money and park it in precious metal. Beyond the U.S., shaky public finances in Britain and Japan have battered the pound and yen. A sinking currency can stoke inflation fears, and with gold's supply capped by physical constraints, it becomes a trusted inflation buffer. Countries like Turkey and Egypt have also felt this pull. Meanwhile, governments flush with US dollars from trade, once content to tuck them into treasury bonds, are increasingly diversifying into gold, spooked by doubts over holding US debt under unpredictable trade policies. Many analysts believe gold's ascent isn't over yet skeptics argue that without yield and amid potential central bank interventions, this rally might hit a ceiling sooner than expected. What's your take? Is gold's meteoric rise a genuine barometer of global risk, or simply a speculative frenzy waiting to pop? Share your opinion and join the conversation below.